Hello dear students. In this video, I will be explaining you about the computation of tax liability. Well, this is the last part of the income tax. After ascertaining the incomes under all the respective heads and after knowing the deductions under section 80C, it is important to learn how to compute the tax liability on the net income or total income. So to compute the tax liability of an individual assessee, we have to follow some steps, and the method in which it will be calculated is better explained with the help of a format. So in this video, I am going to explain you that format first. Once the format is explained, maybe in the next video I will take up one example question to understand it practically. So let's begin the computation of tax liability. The format for computation of the net income and application of income tax slabs for knowing the net tax liability of the assessee as well. So as you know, once we have completed the computation of income under respective heads, that is starting from salary to income from other sources, we will be able to find out the gross total income. So let's find out the gross total income first. So starting from section 15, we know section 15 is for income from salary. Let's take income from salary first. So as it is a format, I will put the imaginary figures there. Section 15, then section 22, you know, that is about income from house property. So this is also assumed to be calculated already. So income from house property will be taken here. Then section 28, that is for income from business or profession. It may be income from business or profession, or profits and gains from business or profession. Both are fine. So upon completing this also, we will take up the next head, that is section 45, that is for capital gains. So we will take the capital gains also into consideration. So capital gains. Then comes last one, section 56, that is income from other sources. Income from other sources. So once we write all these 5 heads of income, and when we find the total of these 5 heads, we get a total, and the total we will be taking it as the gross total income. Gross total income. So this is gross total income. But tax will not be levied on this gross total income, as assessees are allowed to claim certain deductions for the investments they have made. At the next step, it is about claiming deductions. So less deductions under section 80. Deductions under section 80, it ranges from 80C to 80U. So we can try to claim deductions starting from 80C to 80U. So once all these deductions are claimed, we will get a total or a balance, and we will deduct that. And once you deduct that, the remaining balance, whatever it comes there, this can be taken as the net income or total income. So this is the total income. This is the income on which the tax will be calculated, or the net tax liability of the assessee will be ascertained. So this is the first important segment, where we are going to find out the incomes under respective heads. Then we total it, and then we claim the deductions provided under section 80C to 80U, and the balance we take it as total income. So once the total income is calculated, next comes computation of tax liability. This is where we will be officially applying the income tax slabs and all. So tax liability. To find out this tax liability, we have to refer the tax slabs, and income tax slabs ranges from 0 to 30%. And before that, we have to apply special rates for certain special categories of incomes. If you look at the heads of income here, capital gains will attract special rates, long-term capital gain as well as short-term capital gain, and income from other sources. In that also, there are certain incomes which are casual in nature, which will attract 30%, again a special rate of tax. So let's learn how it is going to be applied. So first, it is on LTCG. So let's take tax on LTCG. Tax on LTCG. Tax on LTCG is taxable at 20%. This is a standard rate. So if it is provided in the question, and if we have any income from long-term capital gain, then we will have to apply 20% on that income. We get some answer there. Then the next level is for short-term capital gain. If we have any short-term capital gain incomes or short-term capital gains itself, they are also taxable at 15%, especially for securities. Any income you have received from the sale of securities will attract 15% tax. Other short-term capital gains will be attracting the normal rate of tax, and that gets included with the total income. So if there is any income from sale of securities, then that will be taken as short-term capital gain, and it is taxable at 15%. So these are the two important things. Then the third one is for tax on casual incomes. So casual incomes means the incomes which are not regularly generated, and the incomes which are derived from the activities of gambling in nature, like horse race, crossword puzzles, races, and lotteries and all. So when such incomes are generated, so such casual incomes will attract 30%, standard 30%. In order to discourage the people from involving in these type of activities, government has fixed highest rate of tax, that is 30% on that. So we get some income, some tax on that as well. So put together, tax on LTCG, tax on STCG, and tax on casual income, we will get some answer that we can keep it here. So this is how we get the tax liability on special incomes. These incomes can be referred as special incomes. So on these special incomes, we have this much of tax when we apply the percentages on the income which is available there. So upon ascertaining the taxes on these three important incomes, next comes tax on the balance. At the fourth step, we can take tax on the balance. So here balance means from the total income, we have to separate the values of long-term capital gain, which is already taxed, minus short-term capital gains, which is also already taxed at 15%. Then any casual income, which is taxed at 30%. So resulting balance will be the tax. Resulting balance will be the balancing amount on which we have to apply the tax slabs. So for that, we have to refer the income tax slabs given. So that varies from 0 to 30%. So up to rupees 2,50,000, we all know that is nil rate of tax. So that is going to be calculated. So again, when we look back, so for these three different types of incomes, we will apply the different rates of taxes. They are special rates. And once we get that answer, then we can take up the balance. From this total income, after deducting all these three, whatever the balance remains, on that balance, we have to apply the income tax slab. So that slab varies from 0 to 30%. As I said, first up to rupees 2,50,000, the amount of tax will be nil. The rate of tax is 0. That's why the amount will be nil. The tax payable will be nil up to rupees 2,50,000. And next, slab comes between rupees 2,50,000 to 5 lakh. Next, between rupees 2,50,000 to 5 lakh, the rate of tax is 5%. At 5%, whatever the amount we get, that we can write here. And at the next level, from rupees 5 lakh to 10 lakh, it is at the rate of 20%. Earlier it used to be 10%. Now it has been directly increased to 20%. And at the next level, from rupees 10 lakh to it's not between 10 lakh and 20 lakh or 30 lakh. It is 10 lakh and above. Above 10 lakh rupees, the rate of tax will be 30%. And we get some answer there that we can write here. So now you see the income tax slabs we have applied, or we can apply like this. First up to rupees 2,50,000 nil. Next between 2,50,000 to 5 lakh at the rate of 5%, some amount we get. Next will be at rupees between 5 lakh and 10 lakh. Whatever the balance, that is 5 lakh. On that we have 20% to apply. We get an answer. Then between rupees 10 lakh and above. So any amount which is above 10 lakh will attract 30%. That we get some answer here. When the total of these three, you can see this here, and total of these three put together, we get an answer. And that answer need not be underlined. This is an important answer, and this answer will be called total tax liability or net tax liability. Total tax liability. In case if we don't have any other information to be applied, we can call it as net tax liability. But income tax department still encourages the assessees by providing various other benefits even at this level also. So there you can try certain further deductions or discounts or rebates and all, depending upon your income. So the one of the important discount or deduction, or popularly which is called as rebate, which assessees get, can be written here: less rebate under section 87A. So earlier it used to be rupees 2,500, but from the interim budget of 2019, this rebate has been increased to rupees 12,500. Now that rebate you can claim here from the tax liability, but the condition is that the income should be less than rupees 5 lakh. Income means here taxable income, less than rupees 5 lakh. I repeat, if the taxable income means this net tax liability after claiming all the deductions, after applying all the rules, the remaining amount which comes here as net tax liability is rupees below 5 lakh, then you can claim a deduction of rupees 5 lakh. This is the advantage which is available to the assessees. So they can claim rupees 12,500. Means the total of these three values will also come around rupees 12,500 only. So maximum of rupees 12,500 you can claim as rebate. So this advantage is also there for the assessees. So then whatever the balance we get, that will be continued further for levying the taxes. And once we claim the rebate, whatever the balance remains, on that balance we have to pay an additional tax for which they have used the word as cess, and that cess is now health and education cess. Earlier it was called as secondary and higher education cess. Now that has been replaced by the word called health and education cess, and it is at the rate of 4%. Upon introducing Ayushman Bharat scheme, government decided to levy 1% extra, and they renamed it as health and education cess and made it 4% in order to collect funds for carrying out Ayushman Bharat scheme. It was mentioned like that at the time of introducing this health and education cess. Now you see, we get a total tax liability upon applying the slab, and from that we can claim a rebate up to rupees 12,500 if our income is below rupees 5 lakh. Then whatever the balance remains, tax liability remains, on that we have to pay a cess of rupees 4%, and we get another answer there. So here we are with a balance, and the format does not end here. You can see this is the advantage assessees are getting for keeping their income below 5 lakh. Similarly, they will have to face a burden, or they have to pay more tax if the income is vice versa. That means if their income, instead of being below 5 lakh, if it is increasing, if it is more than 5 lakh, if it is more than 10 lakh, to practically say, if the income is more than 50 lakh or more than 1 crore, the government has decided to claim an additional tax, and for which they have called it as surcharge. With your permission, I will explain that in the next page. So once cess is added, next we will be adding the surcharge. Surcharge is popularly called as tax on tax, because you see, with the balance we have here is a tax. This is the tax liability. This is also tax liability. Actually, this is tax. So on this balance, we will be calculating the surcharge. So that's why this surcharge is called as tax on tax. So surcharge earlier used to be around 15%. If the around 12%, I believe, if the income is above 1 crore. But from the last year, that has been classified into two categories now. And surcharge becomes applicable if the total income is above 50 lakhs. If the total income is above 50 lakhs. So those who are earning higher incomes have to pay higher taxes. In order to bring the social justice, this principle has been introduced. So you can see here, if the income is less, taxes will be less. When you claim the rebate of rupees 12,500, your tax may become nil. Normally it happens like that. And if the income is more than 5 lakh, and if it is crossing 50 lakh, then you can understand the amount of income is very big. So the impact you have to face will also be big. The amount of taxes you are supposed to pay will keep on increasing as your income increases. So that's why there are two classifications. Number one, above if the income is above 50 lakh, if the income, or if the total income, I will write shortly, if the total income is above 50 lakh but below 1 crore, then you will have to pay 10% surcharge. And second one, if the total income is above 1 crore, then you will have to pay 15% surcharge. So need to be careful. You may have to apply both the rates if the income crosses 1 crore, 10% as well as 15%. So as I said, burden increases along with the income which has increased. So we will get some answer here. Still, it cannot be taken as the net tax liability. It can be taken as total tax payable. Finally, income tax department will provide you one more option of claiming certain deductions for the taxes which you have already paid. That is called popularly TDS or TCS, means tax deducted at source. In the case of employees, this is evident. Employer, before paying the salary, will make certain deductions, will make certain portion of his salary towards the tax which is supposed to pay at the end of the year in the name of TDS. So whatever the TDS which is already deducted from your income, or tax which is collected from your income, both can be deducted now. Or TDS or TTS, or even the advance payment of tax. If you have paid any tax in advance, that can also be deducted here. So the balance, ultimately whatever you get, this will be the final answer we get upon fulfilling all the steps, and this will be referred as net tax payable or net tax liability. This is the final answer we will get, net tax liability. Here ends the format, means the computation method of the tax liability of an individual assessee. So from the beginning you can see we have to take all the 5 heads of income one by one. We get a total, and the total will be referred as gross total income. From that we have to claim the deductions under section 80, starting from 80C to 80U. We get another balance that will be taken as total income. On the total income we have to apply the rates of taxes. So if that income includes these type of incomes, LTCG, STCG or casual incomes, then they must be taxed first at these special rates, 20%, 15% and 30%. And whatever the total we get there, that should be in the outer column only. We will keep it there as it is. Then whatever the balance remains from the total income, after deducting the values of these, whatever the balance remains, on that balance we have to apply the slabs. Slabs vary like this, or ranges from 2,50,000 to 10 lakh, or above 10 lakh, up to 2,50,000 nil, between 2,50,000 to 5 lakh 5%, above 5 lakh to 10 lakh 20%, and above 10 lakh 30%. So we get the answers for all these. Then we get a total, and that will be taken as total tax liability. And if the income is below 5 lakh, if the net tax liability or the total income is below 5 lakh, then we can claim a rebate of rupees 12,500. Taxable income should be below 5 lakh, then we can claim this 12,500, that is rebate. And we have to get a balance, and on that balance again we will apply a cess, which is health and education cess, at the rate of 4%. Then on that we have to apply the surcharge. Surcharge is very important, but surcharge is applicable only if the total income is above 50 lakh. Under two heads, if the income is above 50 crore, total income is above 50 crore but below 1 crore, then we will have to pay 10%. And if it is above 1 crore, then we will have to pay 15%. So together we get some answer, and that will be the total tax payable. So from the total tax payable we can claim we can deduct the taxes which we have already paid. We need not pay the taxes again if we have already paid. So whatever the portion of tax which we have already paid during the previous year, that can be deducted if it is in the nature of TDS or TCS or advance payment. So finally, whatever the balance we get, that balance will be the net tax liability. This is what we have to pay to the government officially, finally. And sometimes if the amount what we have paid, if this amount is higher than this, then instead of net tax liability, that can be taken as tax refundable. Remember this, tax refundable. If the amount of tax paid is higher than the tax liability, then the balance will be taken as tax refundable, which is to be paid by the government to the assessee. So here I end the presentation. Hope you understand this. For any clarification, please use the comment box. Thank you.